following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And my goodness, what a rally since the last time we talked. I'm going to pull up the S&Ps really quick. And just to let you know, guys, we're going to continue talking about the breadth situation that we started yesterday. It really didn't get finished. I kind of was all over the place trying to explain a lot of different things. And hopefully today we'll kind of circle the wagons, as they say, and come to a little bit more objective viewpoint. And Al, the taskbar is gone. First time ever. Let's just, as Farley, you're exactly right. Let's just cover some of the usual suspects here, just to kind of give you a bird's eye view, what inflection points to be aware of, where the hopefully the bar charts are relative to our information. And we could look at candles, we could look at a lot of different things, but we try to keep it relatively simple in this show and focus on the profiles and one other indicator primarily. And that would be our navigator. I use a couple other things in the background. We're going to show you some cool things in the scanner today involving trends, which was not in there before. In this build, by the way, you'll be able to pick this up today, right after the show. They should have the emails out from TFNN to get to the links to get the latest version of the scanner. And that will be the one that I showed on the webinar. And here's some of the quick custom filters narrowed down here for you. Strong downtrend. Let's just see what's still in a strong downtrend. They have some candidates up there, but some hotkeys that make things, in my opinion, really easy. So if we click the downtrend button, for example, you'll notice some arrows on the gray cells. I'm going to explain those. Those are kind of direction of the trend, even though we're in the balanced area. And Jay, I'm going to get to your question ultimately on the 60-minute and the blue line, the POC, the point of control, as we like to call it. But first things first, want to basically look at the euro really quick. This is one we've been pounding the desk trying to find any form of a resistance point to sell. Here's the weekly. Nothing new change in the dollar's rallying. That's obviously affecting some commodities. 99.60. Here's the dollar. We talked about this thing racing ultimately above to 128.29. It looks like that's going to happen. Nothing goes in a straight line. This POC on the weekly, when we have a big wide profile relative to price, we didn't cover this in the webinar because this is, really something outside of what I wanted to cover within the scanner. But the POC's in a wide profile. This is one of those kind of little innuendos. You got to pay attention to these blue lines. These are kind of the top of the mountain. These are where, the peak of distribution, the point of control, the most voluminous price point in the profile. And as you'll notice, it's not a midpoint within the profile. Simply, these red lines and green lines are really equidistant from what we call the mean of this distribution. This is what we call the mode, basically. This point of control, this blue line. So this is, again, if you just kind of look up what the definition of mode is on the internet, you'll know what I'm talking about. It's basically the most traveled point in the profile as far as volume goes. So that was a inflection point we had to pay attention to. And I'm sorry, I'm going to tell my programmers to stop texting me here. They were up all night and all morning getting this build together. And one of them saying the TFNN website is blocked. He's in Lithuania. So maybe because Russia and Putin, and you know what? I love this statement. We're going to punish them. Would our president ever say that? I don't think so. But you gotta be a fan of Putin for at least 5 minutes after he said that. We're going to punish them. talking about ISIS. So maybe they temporarily blocked. Maybe after that statement there was some adjustments in router IP control globally. All right. Here we go. Okay, just checking with the programmers here. So that point of control is something to pay attention to on a wide profile. We talked about that. We backed off. But we talked about, there was going to be some, not just a straight line up to that 128.29 on the dollar. That's the case there. Here's the euro, as we kind of know what's going on there. That's an inverse relationship to the dollar for the most part, 35% in an inverse relationship comprised of the dollar, of the euro to the dollar. So here's, again, this is our daily. We talked about, new profile attempting to appear. Then we have the inflection points, 108, 16, 17. Considering long-term trend below profiles, we're looking for resistance points. Fundamentally, I think this thing's going to hell in a handbasket. I think we're going below par ultimately. But right now, you can orient some new stops. And those new stops could be now below 107.09. Do we have David from Clearwater on? Not on phone, S&Ps. Okay. Don't know what that means, Al. It's not on the, I don't know. I'll keep moving forward and maybe you can explain that a little further, Al. So that's the new inflection points on the euro to pay attention to as far as stops go. Here's the 240, nothing new there. Again, I'm looking at this as a long-term situation, so I'm looking at weekly and daily inflection points and not paying too much attention to the 240s. The yen, the go-go yen back in play here as we got back above 122.55, 122.60. Why? Because we got back into that profile. I'm a little bit more long-minded on this. There's that support area, and we talked about using that support. And if we kind of retrace back into that, that's going to be the time to probably back the truck up alongside again for this thing. Daily inflection points were very similar to those weeklies. And now you've got some resistance around 123.60, 61. And that's kind of already been played with the 123.46, 60, 61 area by that POC. Very similar situation to the dollar. Getting to the POC, rattling around. I think we're going to go higher, and I think ultimately we get to 125.28 on the yen, and then you can ratchet your stops up. If we start clearing the 123.5 general area neighborhood, you can start putting stops below that support area, 123.5. Okay, I get it. Dave's with us, and I don't know if he's in the room. Dave, we're gonna get into the rest of the breadth talk after the first break, maybe after the second break, and I don't know if you're seeing our screen while you're on the phone, but we'll try to talk through that and make as much sense as we can, as if you weren't watching the screen. I think everybody's going to get a lot of use out of what we're going to talk about today when we finish up that education on the breadth as much as we can. Let's save the S&Ps for the breadth talk, so we're kind of moving through the usual suspects. This is the Australian dollar. We talked about staying away from this on the short side. There was a big reason, technically speaking. We had this divergence down here, and the dollar rallying. This is not a component of the dollar, but we talked about waiting to get back above 71.69, 71.70 to start playing around with this from the long side with targets initially around 74.39.40. That's still the case because of that divergent situation, and clearing 71.82 is just going to be really, really cool for this to start moving into that unfair high on the weekly. Why? Because we'd be breaking stride on the daily right there. 240s on the Australian dollar. Again, similar unfair highs on the 240 as the daily. Getting through all that's going to be pretty promising, and you can use that as support to get back up, hopefully, into that 74.39.40 on the Aussie dollar. Shanghai really didn't do much yesterday relative to the U.S. rally, opened up, found the inflection point, and sold off. As you can see, we talked about targets from that support around 35.34 of 36.73, where we reached a high of 36.78, so missed it by 5 ticks. And now we're back in the fair auction. The long-term view, still, the programmer's hit me here. The long-term view is still big-time support at 33.12 on the Shanghai. Expected a little bit better reaction out of the Shanghai than what happened. And the U.S. S&P 500 future, we're gonna look at after the break and start getting into that breadth related to that. Treasuries. This is the weekly on the Treasuries. 127.11 was that big number. Let's just kind of figure out the latest information here. We looked at 126.17, 126.18 as a little bit of a resistance possibility on this. Yesterday, obviously, we gapped up and came back down. Right now, the U.S. stock market's obviously rallied a lot. The Treasuries are back in the balanced area. I think we're probably going to stay in the balanced area now that we've, just climbed 300-400 points on the Dow really quick, and that would, in my opinion, still with, believe it or not, the breadth is still a little mixed up. I don't know if we're just going to keep charging forward. I think we could relax a little bit on the S&Ps. We'll talk about that, but that to me would mean that the Treasuries would stay in the balanced area on the daily at the very least. So right now, little non-directional on the Treasuries, and I just rather wait and see on that one. Gold, the 1086 number is really big here. Why? That's the weekly, and we talked about this big run down here over $100 an ounce, and now we've got some weeks that are starting to consolidate here around that 1086 area. That is not that good for gold. The dollar, I think, is going to rally. That's going to, by default, cause this thing to probably reprice itself in the short run at least. 1090, 1086, you got a pretty big lid there. And again, from a classical technical analysis standpoint, this is not the type of action you want to see for this thing to reverse and go higher. All right, January beans, big resistance 871, nothing new there. Crude oil, this is something I thought would hang in there. We didn't talk about it yesterday. We're going to break a little early, huh? We're going to get back into this, finish up crude oil after the break, and hit the S&Ps in the breadth. And hope you're listening, Dave.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. I was laughing at something Mike and Terry were saying in the den here. Yeah, he does sound clueless. It is amazing. It's embarrassing. Talking about Obama. Yeah. Let's do a whole show on that. But, what was anybody thinking? Syria, of all places. I mean, letting refugees just pile into your country. I mean, if one guy gets through, that's one too many. I mean, we always talk about risk rewards. What's the reward? I don't get it. Don't get it. All right, let's hit the crude oil scene here. Finish up with that. So, again, I was looking for 42.76.43 to hold up. We had, some decent price action relative to what the dollar was doing. And the only way to get back into crude oil now, in my opinion, is to get back above 42.76.40 up to 43. All right, and especially you get a weekly close up there. Then you could really use that as a fence, as you see on the weekly and daily, to start kind of, playing the long game a little bit. I think you're going to have to wait till the dollar settles out here and figures out what it's going to do. But again, marks above 43, going to have to pay attention to, and I'm not comfortable going short down here on crude oil. Okay. We're going to look at the XLF really quick. Then we're going to start getting into the breadth here. All right, so XLF, we kind of had determined and forewarned that, a wider yield curve, even with a quarter point minuscule wider yield curve, financials are going to love. And we talked about, in the latest downdraft that happened in the stock market, we talked about trying to find things on support. That's what that little thing in the scanner is for, is long trend support. Find some really, really cool setups. But, the XLF was one we really had to pay attention to stay above these weekly profiles around 24. So that's kind of held up. Pre-market looks like we're trading about 24.26. And, some of these bank stocks, I'm going to go back to the JP Morgans of the world here. Want to see this above 66.53. These are all numbers in the scanner that you can pay attention to, and this is kind of cool. Well, we'll visit that when we hit the scanner hard. A little bit of resistance here around this area, around that 66.58 on the daily and 66.53 on the weekly, but you want to see this punch through again. Remember, on trades like this, we either want to see coming down into support or buying breakouts. All right. And, at this case, you're kind of looking for a breakout on JP Morgan. And the cool thing is in the scanner, we've actually got a breakout hotkey. Boom. There you go. I'll tell you the formula for this. And I'll show you the very simple code that it's kind of searching for to create outputs like this on breakouts. All right. So we got about 2 minutes before the next break. And we're going to hit the breadth conversation that we didn't finish up with yesterday. So the question was, can you use the breadth crossovers really, or some form of the facets of the breadth to really trade S&P futures, trade index futures, and get some barometer of the broad market? We talk about this all the time. We talk about, what time frames are you trading on? I personally talked about yesterday, just to reiterate this, I like to look at long-term inflection points, and I like to wait. I'm getting older. I don't want the excitement anymore. I like to wait till those inflection points are either surpassed and these confirmations happen, or we're coming up into these big inflection points on the weekly and daily for some kind of resistance, as long as I get some confirmations, either with some lower time frame inflection points or the breadth itself. And which breadth do you choose? All right. So guys who are trading short term, let's just go over, some of the things I think Dave was asking yesterday. I think he's more of a shorter term trader. So just to pick that back up, 60-minute crossovers are a system in itself. And on, what was it, yesterday? Yeah, yesterday around 11 a.m. into 12 noon, we started getting a 60-minute crossover. And what does that mean? That means that the net effect of, and these numbers are right here, and the profiles right here are our 60-minute profiles, bottom, POC, and top. If you don't know what I'm talking about, please review the archive webinar that we did. It's on the TFNN website. We're going to devote the next two segments, the last two segments of the show, to finishing this conversation. Come back and join us, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new Market Safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Getting into this breath situation, trying to explain it as much as possible. This is our 60-minute breath. We talked about kind of green above red, red above green, green above red, a long opportunity in the short term, but we're always referencing those major inflection points and boxes, or profiles as we like to call them. So let me go back to the S&P chart and let's just kind of look at yesterday. I mean, you know, when the VIX is high and the profiles are kind of wide, and why are they wide? The VIX is high. The individual stocks are, you know, either emitting wider profiles, which gives a lot more leeway of a balanced area there, which is going to give, you know, on that particular time frame, let's just say the dailies, which is really being reflected right now in the breadth itself, because the daily breadth is still negative, and we're still mixed up on the daily and weekly breadth. That's why I'm not exactly, you know, super mega excited about this rally. But, you know, as we look at that leeway to be wrong in big balanced areas, we have to kind of, as the VIX is high and as we just stated, that's happening, we have to be willing to kind of go down to shorter term time frame breaths for those immediate intraday moves, and kind of use that as the new barometer sometimes. Longer term guys, you know, you're going to have periods of volatility, all right? And we talked about that 2045 being a big area, and 63.45. This is our weekly. And case in point, I mean, you know, we caught some good little bounces here off the 2063, 25-point S&P move straight up, or not straight up, but up. And, you know, we started kind of getting heavy here, and our breath on our daily stayed negative. this is not the type of action you want to see. You want to see prices get away from these inflection points on these profiles and stay away from them. You don't want to see them continue to retest them, and ultimately they're going to start washing people out. And that's what happened below 2063. Now, I was still willing as a long-term, participant, or excuse me, a long slanted participant with our weekly breath still staying relatively positive, and the VIX relatively low, that is. I was willing to pick some battles at 63 on the long side still, and 45. And that's trading. I mean, you got to take some stops, play the odds, try to put them in your favor. But as this VIX climbs up, going back to what I was talking about, and yesterday, some of the questions, this is our 60-minute, and we started breaking above profiles on these lower term time frames around that, what was that, the 2025 area. We started pressing it. We started compressing up into those profiles, and our breaths had turned positive around that same time frame on our 60s. I'm going to go back to and this is for day traders basically. I'm going to go back to our time there around 11 a.m. to 12 noon. We started crossing positive on our short term 60-minute breath. Now the 240s, maybe an hour after that, after we had cleared that profile. But I want to look at something else. As we had kind of progressed into that particular state of those 60-minute and 240 breaths turning positive, yesterday morning pre-market, we talked about 2017 as a big number. And there's a little bit of a chance to be taken, trying to trade this from the long side without any type of breadth coincidental factors, meshed into that particular concept. But as soon as those breaths started turning positive on the shorter term, we had a chance to really explore the entire fair auction, at least up into 2041, 2045. Again, these are for short-term guys who are trying to get some edge with the breadth and also look at profiles relative to that. So, the 60-minute was a big deal to start trading above profiles, period. And this is the picture of that. And the scanner's going to let you know, here's the numbers of that profile. Well, not that historical profile, but the one we're looking at now. You'll see those numbers right here. All right. And you're also able to go in the futures section and just basically pull up, and you can put these in your favorites list and build your own portfolio. But as you look at the S&Ps, you'll start seeing, that term green shoots. You'll start seeing some green shoots. You'll start seeing it surpass this area. So I wasn't a real big, even though we had come down such a long way so quickly, I wasn't a huge fan of buying that 2017. I was a bigger fan, as Dave was on the phone with us, of trying to wait until we got some confirmations to kind of clear the air and start breaking above even our short-term profiles, with the breadth on the short term also started turning positive before we even broke these profiles. So what does that mean? That means that I don't want to short on a short-term basis against inflection points. I want to buy breakouts, okay? Because I don't have any long-term things in the way. I don't have any, weekly 2045s or daily 2063s. I don't have anything like that in the way. As soon as I start breaking outside of these profiles and my short-term breaths are in my favor, it's almost like a hole in the marketplace, and prices are going to move quick. And as you can see, that was a relatively quick move. Now, I'm being a Monday morning quarterback right now a little bit, but that's the general concept. Now, what's the big thing today? And if you guys have questions, just please call in or please ask them in the den. Yeah, Terry, that's a great question. Okay, now we just put some pre-market. Let me go back to this. We put some pre-market identifiers in here for this build. And, hopefully you'll now, as stocks kind of start bleeding in, a lot of that's kind of weird, and prices are not exactly what the specialist or a lot of participants call the actual price pre-market and post-market. But, you know, we're factoring that in to some degree now. And the daily, I just want you to look at this. It does seem weird, but look at the daily on our S&Ps. We're still below profiles, right? So, you know, we're really net negative even on the index profile. Terry? Yeah, you asked that question. Okay. And why is that the case? A lot of profiles, when we started this downslide on a lot of stocks that comprised these breadth numbers, some wide profiles were emitted. And it's going to take a while for those things to flip over in that instance. And that means, you know, the VIX was relatively high to cause that. And therefore, we wanted to kind of drill down into lower term time frame breaths on the 240 and 60 to try to get any type of edge on a short-term basis. Now, the question really is, at this stage, you know, what do you do now? And I can't be a Monday morning quarterback at this stage to talk about this part of the conversation. So we're gonna try to analyze, you know, what might not be a bad, you know, tip for the day based on what we're looking at. So right now, we still have our breath a little mixed up here. Weekly's just barely hanging on, and I mean this is basically non-directional. I mean, you've got a big fat middle ground. I'm gonna blow this up. You've got a big fat middle ground here with our blue line, which is saying how many stocks are trading within profiles. 247. There's 136 above and 117 below. I'm just going to call that relatively balanced. All right, we're in a not so high VIX environment either. And I don't know why I keep switching. You can also change the breadth by just clicking on the numbers here, and I seem to always forget that. So as we're looking at the daily, we're still kind of net negative here. The meaty part of the crowd is still within the profiles here. Not a lot of direction on the long term is what I'm trying to say. And guess what? We're also sitting above profiles on our weekly, yet still below profiles on our daily. All right. So we've got kind of a no man's land situation price wise on the index between 2045 and 2063. All right. Our breaths are kind of confused. What does that mean? We got a little bit of a trading range, in my opinion, and we've already reached a high today of 2059. For guys who are trading short term, we've got a little bit of a range up here between 63 and 45. If we can start showing, and if we can start showing some kind of changes in breadth on our short term that starts showing some negativity, and we start breaking below this 2045 area, and that also kind of coincides with some of our high 60-minute profiles, I'm going to be okay to start selling breakouts below 2045, breakdowns below 2045. All right. But right now, it looks like a little bit of a range situation. It's going to be non-directional. There's not a lot of collusion with the long-term breaths to meet the weekly and the daily. And right now, it remains to be seen with all the instruments not giving numbers pre-market what the short-term breaths actually are. Now, the S&Ps are up a little bit. Tucker, we're going to answer that in about 2 seconds. It's a great question. Again, I'm more of a long-term trader, Tucker. And I'm not a long-term trader, but I look at long-term setups. And I may try to scalp some of those setups around the long-term setups. I don't know if that was correct English, but I'll try to use the long-term setups to try to squeeze some points out of it on a short-term basis at times. And when we talk about Navigator, especially on the index here, I'm looking for kind of broad market turning type situations. And what does that mean? All these are color-coded on Navigator. They have their usage. You can read about this, I believe, on our website. There's an entire 124-page cheat sheets I wrote on this, actually. But I'm looking for divergences, all right? And you might say, is this a divergence, higher highs on Navigator? No, this is higher highs on price action too. I'm looking for that anomaly when I can find it. And I'm going to go back to the Aussie dollar here really quick, just to give an example of that. Okay, I need to scroll up to find things that are higher on my screen. I have to keep telling myself that. Let's take a look at this. This was one that was just really glaring. Long-term weekly, higher highs on Navigator, lower lows on the Aussie dollar. So, after that happened, I mean, are you really looking to lay the wood to this thing on the short side anymore? I mean, even though we're trailing down, using profiles, regulating the trade, some great stuff on the daily, I'm looking for some opportunities for this thing to pop now, and we had that happen already, and we settled back, and I'm looking to play this range again and get back above 71.69, 71.70, put stops below. Not going to play around with it until that happens. Not going to do it. 1,000 points of light. That's awful. Awful impression of George Bush Sr. But until we get back above 71.70, I'm just not interested in even taking on the risk. And a daily close up there, using that as support again with stops below, would just be completely in order. Okay, Terry. That's the way I like to use Navigator when I find those things happening. Those seem to be the biggest, again, long-term kind of sea change event type aspects you can get out of there. Let's go back to our breath situation. So another way, Dave, if you're still listening, it doesn't have to be all about trading the index futures. If you've got an interactive brokers account or Thinkorswim or whatever, I'm pretty sure you can trade a lot of different things out of the same account or some kind of linked account. And I'm leaning towards, sometimes it's better to trade ETFs and individual instruments when there's something to take advantage of. Just like we talked about the Aussie dollar right then. There's an anomaly, divergence in the price action versus one of our indicators. And then you use the profiles to get those confirmations, those inflection points, to see if it's okay to get back in the water as that thing had showed its hand. Now, I'm a huge fan, if you watch this show, getting the broad tide of the marketplace, making sure we have some direction that we can, maybe put some kind of weight in. Right now, it's a little non-directional on the index itself. We've had a big run up without question. I'm trying to find, and I'm going to go in here to my pre-scan sorts, and I'm going to see, let's just see downtrend resistance. I'm going to click that, and this is a formula that I'm going to show you. Nope, don't have it up right now. I'm going to pull it up after the break and just show you what this thing's really thinking about to try to flag situations where we're in a downtrend and we've rallied back up into some inflection points that we need to pay attention to. And these are the particular stocks that really just almost retraced back up into an area that we might call a fence to lean on the short side. So we'll talk about this when we get back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Just looking at some picks there. Do we have John from Philadelphia on the phone?
Mr. Logan, Mr. John Logan, how are you?
Doing all right. Good to hear your voice again.
Say, John, I wanted to ask you if you can share with us clues you're picking up on either the NDX, the NASDAQ 100 cash index, or the underlying, or the futures thereon, the NQZ5s.
Okay.
John, I'm keenly interested in this instrument because this has been has contained the stocks that have led the market higher.
Yep.
And I can see the low Sunday night on the futures or Monday's open yesterday as being an important low. Alternatively, I can see the new high in the NDX that week of November 2nd and the gap down on Friday morning, leaving a potential island top on the cash index as marking an important top. I'm wondering if your work can give some clues to answer the question, which scenario is it?
Well, what you said is correct. I mean, obviously, this thing's kind of in, the best of the best are in this particular group. 45.23 was a big number there, and I'm looking at still a little bit mixed up breadth here on the the broad market. I want to go back to my indices section here, and I want to pull up the NASDAQ really quick. Yeah, we're mixed up on the NASDAQ too here. So I mean, where do I think this thing is headed? I think we got to get kind of out of this DMZ, just like the the S&Ps right now between that low of 45.72 and 45.23. I mean, we're kind of at the top. We're sitting right at this inflection point. I'm not a big fan of the rest of the pack, kind of being sympathetic to this today or the rest of this week. You got to get some confirmations for this thing to move higher, and I just don't think they're there yet. You're going to have to see the S&Ps breach 2063, and then I'm going to feel really good about using the NASDAQ, span that we just talked about as support. And you're also looking for the breast to kind of get coincidental at the same time. That being said, on the short term, you've got some 240 boxes that we've kind of gotten into the top here. We've also, and I'm showing these on the screen here, and even on the short term, we've got a new box that's appeared here on the 60. So, if I go to the scanner and I look at the NASDAQ futures, let me pull that up. Where are they here? Okay, here we go. Basically it's a little non-directional. We're not really seeing anything outstanding here as, we're going into new go north territory again. So I think this is kind of a wait and see.
John, I appreciate the input. Very helpful.
You're welcome. Thanks for calling, John. Okay. All right, so let's go back and look at, I want to look at the euro one more time. This thing's continuing to get hammered here as the CPI came out. So, again, what do you do with this? Short-term guys, I think you could actually put stops above 106.57, 58 right now on the euro trade. And on a little bit longer term, you've got stops above 107.10 on that particular trade. Just to sum up the S&P situation before we go to final ending of the show here, we're in a kind of a no man's land between 2045 and 2063. The breadths are still a little mixed up, and we've either got to get above 63 or below 45 for any kind of directional move. But right now, we're in a range. I think you can play that range for short-term trading. Okay, guys, you've been great. Feel free to call in anytime tomorrow. Ask questions about what we talked about today. And have a good day trading. Stay tuned for Larry and all the other guests on TFNN. You'll thoroughly enjoy them.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.